In today's video, I'm going to teach you how to navigate Bitcoin trading on Binance, with tips on how to turn potential losses into profits, specifically using futures trading. If you're new to this platform, don't worry. We'll walk through each step together to make it as clear as possible. Let's start by visiting Binance, the renowned cryptocurrency exchange, where we'll conduct our trading today. Once you've reached the homepage, look for an option titled USDSM Futures. This is where the magic happens, as it's dedicated to futures trading, which is essentially a way to trade cryptocurrencies with leverage. It's essential to locate and select this option to enter the futures platform. Keep in mind that futures trading allows you to go both long or short, giving you opportunities regardless of market direction. After launching USDSM futures, take a moment to familiarize yourself with the interface. You'll see various elements on your screen, key among them being margin balances, profit and loss, commonly referred to as P&L, and different order types. Understanding these components is crucial. The margin balance is essentially the amount secured in your account to cover potential trading losses. Your P&L will indicate how much you're earning or losing from your trades. As for order types, these help you make precise trades by setting predetermined conditions. Spend some time exploring these to build a foundation for your trading decisions. As we proceed, direct your attention to the trading data section. This feature offers invaluable insights and is imperative for making informed trading decisions. It provides data on the overall market sentiment and the positions being taken by traders like you. Among the crucial data points available, you will find the top trader long-short ratio accounts. This metric shows the proportion of traders that are bullish, long or bearish, short on Bitcoin, which can help you gauge the market mood and potentially adjust your strategy. Next, let's delve into open interest, another pivotal metric found within the trading data tab. Open interest refers to the total number of outstanding futures contracts, providing a sense of how active the market is. A high open interest usually indicates a strong market participation, which often leads to higher liquidity and narrower spreads. Once you're comfortable with these insights, you'll probably feel ready to jump into a trade. To execute a buy or long position, identify the option available on the platform. Remember, going long means you anticipate the asset's price will rise, allowing you to profit from the price increase. Finally, before you embark on any real trading, it's vital to emphasize the KYC, or Know Your Customer requirements. Binance, like most exchanges, mandates identity verification for its users to ensure a secure trading environment. This step is crucial, so ensure your KYC is completed before venturing into any live trading. That's it for today. You've now grasped the essentials of Bitcoin trading on Binance's futures. Stick around for more insights and happy trading.